All right, today we're digging into a real head-scratcher. We've got a company that's not just surviving, but actually thriving while its entire industry is, well, hitting a massive wall. It's like they're defying gravity, and we're going to figure out exactly how they're doing it.
So let's just dive right in. The entire data center industry, the very backbone of our digital lives, is staring down a massive power crunch. But then you have this one company, Equinix, and they're just soaring. So the big question is, what's going on here? How are they pulling this off?
And this, right here, this really lays out the paradox perfectly. I mean, look at this. On one side, you've got the rest of the industry dealing with power shortages and huge project delays. And on the other side, you've got Equinix. Their stock is rallying, their growth is strong. What is their secret sauce?
Okay, so to really crack this case, first we have to get a handle on just how big this problem is for everyone else. Let's take a look at the industry's energy crisis.
When you boil it all down, the problem is actually pretty simple, but it's massive. Our digital world, it's just expanding way faster than our physical world can support it. We're hitting a very real, very hard limit, and that limit is power.
So the core issue is the incredible strain on our electrical grids. Think about it. Our demand for data, especially with AI and streaming just exploding, it's just insatiable. And now we're seeing the fallout, right? Major projects are getting put on hold, companies are genuinely worried about just keeping the lights on, and now there are even these big concerns about how much water is being used for cooling. It's like a domino effect of problems.
All right, so with that kind of bleak picture painted, let's start our investigation. We're going to pivot from the problem to the solution and start uncovering the first clues to how Equinix is managing to navigate this storm so well. Which, of course, brings us right back to our central question. How on earth is Equinix dodging all these bullets that are hitting the rest of the industry? Well, the first clue is just a number, 270 plus. So what in the world does that mean? It means Equinix has this sprawling network of over 270 data centers spread out all across the globe. Now, this isn't just about being big for the sake of being big. No, this is about being everywhere. This huge global footprint is a strategic masterpiece. It gives them access to power in places where it's still available, letting them build where their competitors simply can't.
And building on top of that global footprint is their next big advantage. It's a service called interconnection. Now, the best way to think about this is like a private superhighway just for data. Inside their data centers, companies can pay for a direct, super secure connection to cloud providers, to their partners, you name it. It's way faster, it's safer, and it's a massive, massive part of their business model.
So see, when you put all these pieces together, you start to see this really powerful combination they've built. They've got that global scale with over 270 locations. They have major clients. We're talking the big hyperscalers like the cloud giants locked into long-term deals. And then they have that unique, booming interconnection business layered right on top. It's like a multi-layered fortress. But hey, you don't have to take my word for it. The proof, as they say, is in the pudding, or in this case, the numbers. Let's look at the financial smoking gun.
And wow, here's where you can really see the separation. While other operators are kind of hitting the brakes, Equinix is projecting revenue growth of 15% or more. That is a huge difference, and it tells you that their business model is doing something incredibly right. And you know what the best part is, at least for them? This isn't just some hopeful projection or a shot in the dark. Nope, this growth is fueled by a strong backlog of deals that are already signed. They have this incredible visibility into their future revenue because the contracts are already locked in and ready to go.
Okay, so we've seen the clues, right? We've got the global scale, the interconnection business, and these rock-solid financials. It's time for the verdict, which really all boils down to what analysts call their unbeatable moat.
So, this key concept that really ties their whole strategy together is the location moat. Basically, it's a competitive advantage that's created simply by a company's physical locations. And think about it, it is unbelievably difficult and expensive for any competitor to even try and replicate a network of over 270 strategically placed data centers. It's a huge barrier to entry.
The source analysis we're looking at puts it pretty bluntly. Quote, location moat strong, 2026 stable growth despite macro risks. In other words, even with all the uncertainty in the world, their physical advantage gives them this powerful built-in stability.
So, after weighing all the evidence, the final call from the analyst report we're breaking down today is a buy recommendation for Equinix.
Now, of course, we always have to say this, and it's super important. This explainer is just for informational purposes. It is absolutely not financial advice.
You know, this whole story really brings up a much bigger question for the future of technology. In a world that's just getting hungrier and hungrier for data, for AI, is something as simple as access to power becoming the ultimate #1 competitive advantage? It's a question that could really define the next decade of tech. Thanks for tuning in.